Welcome to This Explainer. If you're a student just starting to map out your financial future, or honestly, anyone looking to build wealth from the ground up, you are in the exact right place. Because what if I told you the world's richest investors don't actually have some top secret stock tip? There's no magic formula locked away in a vault, and they definitely aren't relying on shady insider info. A lot of folks just assume legendary investors got rich because they got lucky, or maybe they just knew something nobody else did. But the truth, it's actually way simpler and honestly a whole lot more powerful. Today, we're going to uncover the real, totally accessible secret behind the wealthiest investors in history. So let's jump right in. So let me ask you straight up, what do you genuinely think is the true secret to wealth? When you hear names like Warren Buffett or Ray Dalio, what pops into your head first? Do you picture this chaotic, screaming trading floor? Maybe a dozen computer monitors flashing red and green numbers all day? You know, as someone just getting into the world of finance, it's so easy to look at the massive fortunes of these titans and just assume they're playing a completely different, crazy complex game than the rest of us. And honestly, that perfectly highlights the massive gap between perception and reality here. On one side, you've got what most people think investing is: frantic day trading, hoping for a lucky break, hunting for insider tips, and basically dealing with stress levels that rival finals week. But then you look at the reality of the world's wealthiest investors, and it's radically different. Their reality is anchored in patience. It's measured in decades, not days. It's all about compound growth. The absolute biggest difference between an average, stressed-out investor and a truly wealthy one, it's literally just time. Section 1, the superpower of time. Think long-term. You see, most people are chasing quick profits, right? They're hoping to get rich by next month. But the richest investors, they think in decades. Take Warren Buffett, arguably the greatest investor ever. He bought some of his best investments and has literally held onto them for decades. We're talking decades, not hours. So let's break down how the superpower actually works with a really simple analogy. Imagine you start with an initial investment of $10,000. Let's just say you invest that money and it earns a steady, reliable 10% return every year. Now, if you're a beginner, 10% might not sound like this completely life-altering number. You're probably thinking, well, that's definitely not going to make me a millionaire overnight. And you know what? You're absolutely right. It won't. But the wealthy literally do not care about overnight. They care about what happens when you let that money just sit there and let a very specific mathematical phenomenon take over. Okay, so here's the math on how this snowball actually starts rolling. Look at year one. Your $10,000 earning 10% becomes $11,000. You made a cool $1,000. That's great. But the absolutely crucial part, that happens in year two. Because in year two, you aren't just earning 10% on your original 10 grand. Nope, you're earning 10% on the new total of $11,000. Your money is making money, and then, here's the kicker, that new money starts making its own money. Over a few decades, this creates this massive, totally unstoppable snowball effect. What starts as a small investment, just growing steadily year after year, eventually turns into something absolutely enormous. In fact, this concept is so powerful that it's often attributed to one of the smartest people to ever walk the earth. Albert Einstein supposedly called compound interest the eighth wonder of the world. Now look, whether he actually uttered those exact words or not, the foundational idea is spot on. The richest investors deeply, truly understand that money grows the absolute fastest when it's just given time. Instead of frantically chasing those short-term flashy gains, they calmly focus on long-term compounding. They just kick back and let the eighth wonder of the world do all the heavy lifting for them. Section 2, the superpower of ice. Control emotions. Now, waiting around for decades sounds super easy on paper, but in the real world, it requires what I like to call ice in your veins. Because honestly, the hardest part of investing isn't finding good investments or crunching the numbers. The real hurdle, especially for students and beginners, is mastering the psychological test of emotional control. Because here is the blunt, unfiltered reality. Markets crash. They always have, and they absolutely always will. The market is going to soar to these dizzying record highs, and then it'll plummet to terrifying lows. This volatility, it's a guaranteed feature of investing, not a bug. And it's in those exact moments of extreme volatility where your emotional discipline becomes the literal only thing standing between you and financial ruin. Just look at how two totally different mindsets react to a crash. The average investor, they let fear and greed run the show. When the market crashes, they completely panic, assume they're going to lose everything, and end up selling their investments at the absolute worst possible time. On the flip side, when markets are soaring, they get super greedy and buy in at vastly inflated prices. But the wealthy investor, they do the exact opposite. They remain totally calm like ice when everyone else is losing their minds with fear. They stay incredibly disciplined when others are getting overly hyped. Remember, the stock market rewards patience and discipline far, far more than it ever rewards emotion and impulse. Section 3. The real worth. Focus on value. So, if wealthy investors are just staying calm and holding on for decades, how are they actually picking their assets in the first place? Like, how do they avoid getting sucked into those endless hype cycles we see on our phones every single day? Well, they use something called the circle of competence. The absolute richest investors do not try to invest in every single thing under the sun. Instead, they hyper-focus their investments solely on businesses and industries they deeply, fundamentally understand. Take Warren Buffett again. He famously avoided a ton of technology investments for years. People seriously thought he was crazy for missing out, but he just flat out said those businesses were outside his area of expertise. Rather than trying to be a genius at everything, successful investors know exactly what their strengths are, and they ruthlessly stay within those boundaries. Because understanding what you're actually buying, that dramatically reduces your risk. And let's be real, staying in your circle is especially tough today, because every single year, these new, incredibly loud investment trends just explode onto the scene. Think about the massive hype we've seen around cryptocurrencies, meme stocks, or artificial intelligence. Now, just to be clear, we aren't saying these are inherently bad or good investments, but they are undeniably hyped up. Hot sectors come and go, constantly tempting everyday investors and students with the ultimate fear of missing out. The FOMO is so real, and it drives people to completely abandon their game plans just to blindly follow the roaring crowd. But when that hype becomes absolutely deafening, the wealthy investor just hits pause and asks one simple, incredibly boring, but absolutely crucial question. What is this asset actually worth? Instead of just following the crowd on social media, they quietly hunt for opportunities where the broader market has underestimated the true value of something. They just want to buy quality assets at reasonable prices. And once they do that, they just wait patiently. They wait for the rest of the market to eventually wake up and recognize that true worth. Section 4. Compounding your mind. Never stop learning. So we spend a lot of time talking about compounding your money, but the ultimate asset, the one thing that truly drives all of this success, is actually your own brain. Notice how this exponential curve of knowledge acts exactly like that money snowball we looked at earlier? It's incredible. The best investors in the world are lifelong students. They're constantly reading books, studying businesses, analyzing economic trends. And because they do this, their knowledge compounds exponentially over time, exactly like compound interest sitting in a bank account. Every new book you read naturally connects to the last book you read. Every new business you study gives you a richer context for the very next business you analyze. The more you learn today, the significantly better your decisions are going to become 10, 20 years down the road. To put a human face to this data, let's look at Warren Buffett one more time. It's a pretty well-known fact that Buffett spends a massive chunk of his day just sitting in his office, reading. He's not constantly making trades. He's not yelling on the phone like in the movies. He's quietly reading annual reports, books, and newspapers. Many of the most successful investors out there just consume information constantly, because they know without a doubt that investing in their own education is the one single asset that can never crash, it can never be taken away from them, and it's going to constantly yield higher returns when it comes to their decision-making. So the crucial takeaway here is that there really is no magic trick. Let's quickly summarize these core, incredibly simple principles that have successfully built fortunes for generations of investors. First, think long-term instead of chasing those quick wins. Second, trust the math of compounding. Third, constantly work to control your emotions, especially when the market is panicking. Fourth, only invest in what actually falls inside your circle of competence. Fifth, focus on an asset's real value and just completely ignore the hype. And finally, never ever stop being a student. I want to leave you with this final kind of provocative thought. In the world of investing, the biggest advantage isn't actually about being the smartest person in the room. The true advantage is simply being more patient than everyone else, because wealth creation, at the end of the day, is way more about your psychology than your intelligence. Wealth is quite literally a test of patience. So as you start out on your own financial journey, you really have to ask yourself, are you willing to